loan growth is not much to talk about.
Yeah, that would be interesting. Maybe put some momentum, too, in terms of the sector in the trade this year. Sonali, there are the numbers, which we've really highlighted, I think, pretty well. But then there's also the context that we get from the individual bank CEOs. One of the things that caught my attention this morning is what J.P. Morgan's Jamie Dimon had to say. What did we get on that front, the commentary?
That caught my eye as well, because for a bank that just raked in almost $90 billion of net interest income, there's a lot of caution in the water. And he has a whole host of risks. One he talks about a lot that I think a lot of the market is not paying enough attention to is quantitative tightening by the Federal Reserve, that lack of control that Fed has over the long end of the curve and therefore longer term interest rates. He also speaks to interest rate risk more largely and the fact that interest rates could be higher given the spending levels we'll see it. We have to remember the backdrop in Washington that we're facing right now. And also other inflationary pressures like what you would have to spend for the climate transition. This is something investors talk about all the time, but it's interesting to see that in the context of a quarterly earnings report.
Right.
And thinking about these risks really matter when it comes to putting money to work today.
Anton, I see you nodding along with what Sonali's saying.
Yeah.
Chime in on what you heard from the CEOs and what sticks out to you.
Jamie's been the bear, right? I mean, I don't know how many times he said, hurricanes coming, storms coming, and look, he's been conservative. He's run his bank conservatively. And I'm not saying that he's not right about some of the risks out there. Clearly, there are some major risks. Certainly what's going on in the Middle East is a major risk, energy prices, inflation. But at the end of the day, that conservatism has always served J.P. Morgan well. I think the most important thing we're hearing is there's slower growth out there, and no panic, right? Nobody else is saying hurricane or disaster or anything else like that. So, much as, like I said, the porridge was sort of the right temperature in terms of the earnings.
Right.
I think everybody's waiting for the Fed. Everybody's waiting for these external events. But if you look at the valuation of this group, Sonali brought this up. It's very important.
Yeah.
You've got a bunch of companies that traded 10 and 11 times earnings. And you've got all these companies that either don't have earnings or traded absurd multiples. Something has to give here in terms of that gap.
Hey, one last thing before we go, and we want to talk to you, Sonali, about the next big risk, because it's going to premiere tonight on Bloomberg Television, 8 p.m.
And it's already on the terminal. As far as the print story goes, we asked 3 Wall Street executives what they're most worried about. And in this issue, they're worried about escalating geopolitics. They're worried about the erosion of the American dream, given the lack of investment in education in this country. And they're worried about the longevity risks of people living longer. That is Katie Koch of TCW, Ray McGuire, the president of Lazard, and Wes Edens, founder of Fortress Investment Group. Really interesting and thought-provoking.
It's too bad you didn't shoot high for those guests.
It's my favorite piece of the year. You know that.
It's always killer, and we always get a lot of conversations out of it and around it. Our thanks to Sonali Basak, Bloomberg News Wall Street reporter, and always our thanks to Menon Capital Advisors President and Chief Investment Officer Anton Schutz. Anton, be well. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got 39 minutes to go until we wrap up the trading week, and then it is on to the weekend. Right now, the Dow, the S&P, NASDAQ, they are all trading lower. We're looking at a 3-point drop for the S&P 500 index. Little change, down less than 0.1%. Dow Industrials down 160, a decline of 0.4%. NASDAQ down 22, a drop there of just about 0.1%. 10-year yield 3.95% with a 2-year at 4.13%. Gold up $18 the ounce to $2,047, up by about 0.9%. West Texas Intermediate crude up 1.1%, $72.81 for a barrel of WTI. Victoria Fernandez is chief market strategist at Crossmark Global Investments, and on Bloomberg Surveillance this morning, she told us she is becoming concerned about corporate pricing power.
You know, when you look at corporations as a whole, they are losing some of that pricing power. As you have the disinflation come in, as wages continue to stay high, these companies are losing their pricing power. We think it's going to affect margins across the board, and that's going to be one of the key themes for this earnings season. It's one of the reasons we think the market is probably going to have more of a pullback than what we've seen so far.
And you can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Boeing is being sued by passengers on an Alaska Airlines flight that was forced to make an emergency landing in Portland, Oregon last week after a midair blowout of a so-called door plug on the 737 MAX jet. Alaska lower now by 5%, Boeing down by 2.2%. Recapping stocks lower, S&P 500 index down 4, a drop right now of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, some have said we are already a world at war. The latest, a ship hauling Russian oil had a narrow miss with a missile fired from Yemen as vessels increasingly dodged the Red Sea following airstrikes on Houthi rebels.
Meantime, early Friday, the U.S. and U.K. launched about 70 airstrikes on Houthi targets in Yemen in an effort to stop shipping attacks in the Red Sea, though the Iran-backed group also pledged to retaliate with an urgent response. We did see some economic reaction, of course, Carol. Oil shot up on the news, although WTI has backed off as of now, the day's highs.
All right, so Bloomberg Opinion's Mark Champion writes today there are at least two views you can take on the U.S. decision joined by Britain to strike Houthi targets in Yemen earlier today. Although they are entirely contradictory, both would be correct, he writes. Mark is Bloomberg Opinion international affairs columnist, joining us with more on his column today on the Bloomberg and at Bloomberg.com/opinion. He's on the phone from London. Mark, we so appreciate you joining us again this week. Also with us on Zoom from Washington, D.C. is Bloomberg News International Economics and Security Team Editor Larry Liebert. Larry, first quickly, let's start with you. The latest on the situation and what we know about the U.S.'s involvement and reaction to all of it.
Houthi attempt that ended up almost hitting a Russian tanker. That probably wasn't their intended target, and it probably wasn't what they said when they vowed imminent retaliation for the attack. So we're sort of still holding our breath internationally to see what comes next, what the Houthis intend, and whether that will contribute to the wider war that the U.S. Clearly is concerned about, even though President Biden, and working closely with his colleagues in the UK, his counterparts in the UK, they decided some military action was needed.
Mark, come on in here because you have a new column out that talks about how Iran is the winner when it comes to these U.S. airstrikes on Yemen. Why is that?
Well, in essence, this is a series of events, a kind of board for a game, if you like, that was not set out by the U.S. It was set out by the Houthis, and they are strongly backed by Iran, and they're armed by Iran, and so on. And so, in essence, what is happening here is that these airstrikes last night, it was just a question of time. It was inevitable politically. It was, inevitable that the U.S. would have to do it, that President Biden would have to make that decision. And then also just in terms of deterrence, the U.S. and its coalition partners had, multiple times said, you have to cut it out, or there will be serious consequences. And eventually, as the Houthis sort of ramped up their missile attacks, it had to happen. So it happened, and yet, it was clear that the U.S. was quite reluctant to do this, had hoped it wouldn't have to. And the reason is that it's quite unclear whether it can be successful. You can see already that the immediate effect, if your goal is to open up shipping and get it safe, the immediate impact has been to make it effectively more like a war zone and make it less safe. The U.S. itself had said that all shipping going through would have to take care. It's really interesting that an oil tanker has been involved, because that's the first time that it has in all this. It's been the container shipping that the Houthis have attacked, which is why until now the oil price hasn't really been affected. But today it was. So if your goal as the U.S. is to open up commercial shipping, you knew going in that by making airstrikes, at least in the short term, the opposite's going to happen. Secondly, if your aim is to make sure that there isn't any escalation of the war in Gaza, further escalation across the region, as soon as you start this kind of kinetic military action, you don't know what the next point's going to be, because you're not in control of what the other side does. So, all these things make it something that I very much doubt that the U.S. wanted to do, but it felt it absolutely had no choice.
Larry, come on in on what you are hearing. Yeah, please come on in.
Yeah, I was going to say, I never argue with Mark because he is so knowledgeable in the region, but I would add to that, a lot of us, probably uninformed, but a lot of us were thinking they'll do something, they'll hit a warehouse, a weapons warehouse in Yemen. But it was far, far broader than that. It was a significant attack on Houthi resources by multiple missiles, aircraft. It was really a significant military action. And that was surprising, and it probably only underscores that they felt that they had no choice but to go ahead, not only politically but militarily, that there was no other way to send a signal that was much more significant than all the pleas for the Houthis to stop.
Mark, I keep thinking about the upcoming November elections here in the United States, and I do wonder if, again, and I think Tim has asked about this with some of our guests, prior, whether or not this proxy war, essentially, or is this a proxy war with Iran, who is really just perhaps looking to destabilize the U.S. ahead of that election and just kind of create some more chaos or distraction, perhaps, for the White House?
I think so. I think primarily Iran has been opportunistic. This began with Hamas's attack on Israel, and as far as we have seen any evidence, Iran did not orchestrate that. But they have seen how to benefit from it. For them, their contest with the U.S. is zero sum, and I think that they. I'm not sure that they are certain that they prefer to have Donald Trump in power for a second term, but they're sure that they want to make trouble for the U.S. wherever they can in the Middle East, to push the U.S. out of the Middle East, and to make sure that what they were currently really worried about, which was a deal that the Saudis were going to make with Israel and the U.S., both involving an economic and security deal, that was threatening to Iran, and they are taking this opportunity to try and make it impossible for the Saudis to proceed with this, essentially by soaking up rage against the U.S., which they've done actually quite successfully. And you could argue that Israel, by the nature of its action in Gaza, has also, contributed to, and that's why you've seen the U.S. trying so hard to de-escalate.
Right. Well, okay. U.S. trying hard to de-escalate, but at the same time, these U.S. airstrikes on Yemen are not de-escalating in the region. So, Larry, I want to go to you and just ask what you and your team are watching over the next few days, just to get an idea of scale and scope of this.
Well, as I say, we're all watching. The world is watching to see what the Houthis are going to do to make good on their threat of retaliation. Presumably, they are looking at hitting, and this is just speculation, but they're looking at something that would make a mark beyond the Red Sea, and that might be hitting a U.S. base or a facility or some action like that, which would be potentially escalatory. It's interesting whether Iran does anything more than suggest their support or their condemnation of the U.S. strikes. While Iran clearly, as Mark mentioned, benefits from having these groups that they supply, they provide weapons to, they support, they finance. On the other hand, the Houthis, in part, maybe initiated all this on their own because they want to be more significant players in Mideast politics. So there's a lot to watch for in coming days.
A lot of moving parts, no doubt about it. We really appreciate both of your time. Bloomberg News International Economics and Security Team Leader Larry Liebert and Mark Champion. He has been a go-to for us throughout the week. He is an opinion international affairs columnist here at Bloomberg, joining us, of course, from London.
Hey, let's get to Washington, D.C. now for checking latest world and national news. We got Nancy Lyons in the Bloomberg 99.1 newsroom in D.C. Hey, Nance.
Thanks, Tim. Stormy weather has forced the cancellation of more than 2,700 U.S. flights so far today, with another 17,000 delays. That's according to FlightAware, the flight information website. Chicago airports have been severely impacted, with more than a foot of snow expected there. And on the East Coast, where flooding posed a problem earlier this week, Bloomberg meteorologist Rob Carolyn says residents should expect another deluge this weekend.
Low pressure will race up into the Great Lakes states this evening. It's going to produce quite a bit of rain from the mid-Atlantic and the southern New England into New York City, then across the Gulf Coast and southeastern United States. In fact, along the Gulf Coast and in parts of the southeast, there could be some strong thunderstorms.
Again, Bloomberg meteorologist Rob Carolyn. Justice Department officials say they do plan to seek the death penalty for top supermarket shooter Peyton Gendron. He's already pleaded guilty to state charges of killing 10 black people in the 2022 Buffalo attack. It's the first death penalty case for Attorney General Merrick Garland. Buffalo Mayor Byron Brown believes the community will support his decision.
When you have masses of people that are killed by a shooter, innocent people whose lives are snuffed out, I think the death penalty should apply.
Buffalo Mayor Byron Brown, an attorney for Gendron, says she's deeply disappointed by the government's decision. President Biden is announcing that federal student debt will be wiped clean for some who took out small loans. Those who got less than $12,000 in loans and have been paying them off for at least 10 years will see their remaining debt canceled immediately. The move, announced today, applies to those who are enrolled in the Save Repayment Plan. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, Russell 2000, all in the red. 20 minutes to go until that closing bell clangs on Wall Street. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are trading well off their morning highs, with the Dow currently down 163 points. S&Ps are down 2, and NASDAQ has pared losses to 15. The U.S. 10-year yield at 3.95%. Gold is up 18. Oil trading in the green, but Bitcoin is down another 5%. Among the main 11 S&P sectors, leaders were energy and real estate, consumer discretionary, and healthcare were under pressure. And leaders to the upside in the Dow, IBM and Verizon, while UNH fell 3.8% after earnings and led to the downside. Also after earnings, JP Morgan reversed gains of 3.5%, while Wells Fargo fell 3%. And wrapping things up, United fell 10% amid weakness in the airlines. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Thank you very much, Bill Maloney. To hear live breaking news over your Bloomberg, type SQUAWK, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody.
Is it that time? TikTok?
Time flies when you're having fun, baby.
It really does. I mean, this is a packed show.
It is a packed show. It's been a packed week. It's been a packed 2024 year, and it's January 12th. So let's get to it. Let's talk a little bit about what's going on in terms of the market trade today, because we've had a lot thrown at investors specifically. And that 2-year yield, hitting the lowest since May, unexpected decline in the PPI, producer prices, reinforcing bets that the Fed's going to cut rates this year, maybe more aggressively than not, again.
Okay, so airlines taking a dive because
Yes.
Delta came out and said that it's backing away from its 2024 profit target. You have banks reporting this morning.
Yeah.
You have the PPI figures. And then all that equals a flat S&P 500, Carol.
Yeah, agreed. It's kind of funny, right?
Yeah.
But let's talk a little bit about fixed income, because you've got a 10-year note that's, below 4% right now. That 2-year note, the shorter end of the yield curve, 4.14. So we've seen yields along the curve certainly move down. That 2-year, most sensitive to what the Fed may or may not do. So let's get to it. Our drive to the close guest, as I said, perfect guest as we watch this move in U.S. rates today. With us is Kathy Jones, Managing Director and Chief Fixed Income Strategist at Schwab Center for Financial Research. She's going to join us in just a moment. I said she's a perfect guest because, so much we talk about, we focus on the equity side of things. I kind of get it, right? It makes a lot of sense. But really, so much focus is on what's going on along the Treasury curve and what's going on in terms of rates, which we've really stayed a lot this week. We did bump ahead and above 4% on the 10-year on that hotter than expected CPI report earlier in the week. PPI coming in softer than expected. You've got that 10-year, as I said, below 4%. 2-year, more sensitive to the short-term expectations and what the Fed may do, 4.14. So as we said, perfect guest to talk about what's going on in fixed income and what's the right strategy here in 2024.
Kathy Jones, and Managing Director and Chief Fixed Income Strategist at the Schwab Center for Financial Research. We last spoke to her in person, I think it was back in October, Carol, in Philadelphia.
Schwab Impact.
Yeah, that was great. She joins us now on Zoom from Miami. A little warmer than Philly is right now. Kathy, good to have you with us. Happy Friday. What did you make of all the data that we got over the past week and the way that the yield curve has adjusted a little bit?
Yeah, I was a little surprised that the impact of the CPI was so short-lived, although, there were some mitigating factors in there. And keep in mind, 1/10 here, 1/10 there in the grand scheme of things, it doesn't make a huge amount of difference as long as the trend in inflation's going down. And I think we saw that confirmed with PPI today. So in general, the market seems to be wanting to anticipate those rate cuts by the Fed. I think it might be a little bit aggressive in what's being priced in. But that being said, as long as the trend in inflation is going down, I think that expectation of rate cuts is going to stay there.
Interesting. So what's your thoughts in terms of the 10-year? Do you feel comfortable kind of putting a number on it, Kathy, further out, or much more comfortable when you think about kind of the shorter end of the yield curve here?
Well, we have fair value in the 10-year right around 3.80 to 4%. So it's kind of there, which may or may not be a good reason to think it's going to bounce around here for a while. But that does assume that the Fed cuts and continues to cut over the next year or so, and then inflation continues to trend down. That is our base case scenario. So we think we're fairly valued here in the 10-year. I wouldn't expect a lot to happen. I think we'd get a lot of volatility because our expectation is that the Fed won't probably move as aggressively as the market thinks it's going to move. We have penciled in 3 to 4 rate cuts starting in May. So that's a factor, I think, that could give us a kind of a bounce around in yields here for a while.
What would change your view of 3 to 4 rate cuts and starting in May? What has to happen in order for you to say, wait a second, we think the Fed's going to hold off till June?
Well, I think it's all about inflation. I don't think there's anything else. We could get some sort of growth issue, but in general, if inflation were to start to turn around and move back up, particularly if wages started to tick up from here, I think the Fed would be concerned about that. It doesn't seem likely given where we are and what's going on, but if inflation were starting to show a tendency to pick up from here, then the Fed might hold out longer. One reason we think May is a better estimate of the starting point than March is that the Fed still has to deal with quantitative tightening and tapering down that program.
Right.
We expect that to happen in March, or some indication of that in March, and then the rate cut would start in May.
Well, and that jives with what we've heard from Loretta Mester, Mike McKee, having a conversation with her, and she doesn't think that there's going to be a move in March, right? And that was a big headline for us, and I think Bill Dudley maybe giving some, talking about that a little bit earlier in the week. It also says to me, Kathy, that maybe, while the Fed will be remaining vigilant on inflation, it also means the economy isn't kind of falling apart. I get a little nervous when everybody's talking 6 rate cuts. I'm like, well, what's going to be the reason that we need to see that from the Federal Reserve? Do you agree with that?
I think that that estimate is aggressive. So for 2 reasons. One is this Fed has been comfortable waiting it out, right? They've been sort of backward looking and saying we'll shift when inflation shifts. And so we've had a big decline in inflation, but we're not at 2% yet. And there is some still chance that, it stalls out here. That's not our scenario, but certainly could be something that happens that I think the Fed wants to wait for, particularly with the economy still doing okay. And so the scenario I think that they're waiting for is either the economy really does roll over, or inflation gets really close to that 2%, and they can cut just to keep pace with the decline in inflation. So far, they've allowed real rates to go up by holding steady and allowing inflation to come down. At some point, they'll want to follow that trend lower. But I do get the impression from this Fed that they're content to wait it out a bit longer.
Yeah, exactly. And forgive me, I said Bill Dudley, who is now a Bloomberg opinion columnist, the former head of the New York Fed.
Did you meet John Williams?
I was thinking about John Williams. They both, there was a Dudley column recently, but John Williams setting really a high bar for bets on a March cut. So we did kind of hear them all on the same page. I've been doing
Fed guys.
I've been doing this too long. I'm going through too many heads of the New York Fed. Kathy, always great to catch up with you. Have a great and safe weekend. Kathy Jones, Managing Director, Chief Fixed Income Strategist at Schwab Center for Financial Research on Zoom from Miami. And it's also like we're lucky. So many Fed presidents kind of come into our sphere here at Bloomberg, become
we're so
opinion
lucky.
columnists. So forgive me, everybody. I've been doing this a long time.
Hey, I wanted to check out the 5-day for the week.
Yeah.
We're actually positive by 1.8% on the S&P 500 and
How
by
much?
3%, by 1.8 on the S&P, and the NASDAQ up by 3% this
So
week.
maybe taking a breather ahead of a long weekend.
Yeah.
All right, don't go anywhere. We've got more to come right here on Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Citigroup shares up now by 1%. Citigroup says it will eliminate 20,000 roles in a move that will save it as much as $2.5 billion as part of CEO Jane Fraser's quest to boost the Wall Street giant's lagging returns. 5,000 of those cuts will be managers, but is Fraser moving fast enough? That question this morning for CFRA bank analyst Ken Leone on surveillance.
Jane Fraser has no choice. She has a monolithic bank that she's trying to streamline to be a very different bank in the future. And by doing that, I think the story that hasn't been told is that key talent is looking over their shoulder whether they have a job or not, or whether how much risk they should take, whether it be in investment banking or trading.
Word came as Citigroup announced fourth quarter earnings. Citigroup shares again holding on to a gain of 1%. JP Morgan Chase after earnings down 0.8%. Wells Fargo after earnings down 3.1%. Bank of America after earnings down now by 1%. Sources say Universal Music Group, the record company behind Taylor Swift and Drake, plans to cut hundreds of jobs in the first quarter of the year. A source says the company's biggest division, recorded music, will be hit the hardest. ADRs of Universal Music Group, they're up by just about 1.7%. Bottom line, S&P now turning higher. We've got minutes to go ahead of the close. Those are some of the top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week.
Is it?
It is, yeah.
Of course it is.
With Carol Masser and Tim Stenivek. I'm Tim. That's Carol.
Yes.
And we are a little horrified at the cost of...
The conversation we've been having off air, because a colleague of ours came in and was talking about his son.
Yeah.
And we'll give away details, but about the college process and the school he's going to.
Looking at schools.
And what it's going to cost?
Over $80,000 a year.
Almost $90,000, I thought he said.
Yeah.
Yeah. That's crazy. So a story that's really popped up by our Josh Wingrove on the Bloomberg terminal has definitely caught our attention. President Biden's administration is going to cancel a fresh batch of student loan debt for some borrowers, his latest effort after the Supreme Court blocked his flagship proposal to offer billions in relief. You remember that, right? We were talking about it a lot last year.
Yeah, this is one of the most read stories in the last hour on the Bloomberg terminal. Josh Wingrove writing that Biden announced this afternoon that the administration would cancel certain balances under the Saving on a Valuable Education Plan. It's the SAVE plan. Beginning in February, borrowers who took out less than $12,000 and have been in repayment for at least a decade will have remaining balances canceled.
Less than $12,000.
And if you took out less than $12,000 and you've been paying for at least a decade, then how much do you have left? I mean, hopefully not much.
Hopefully,
because
yeah. Right, if you've been paying for that long.
Listen, I think I've told this story before, but a friend of mine whose wife took out loans to go to graduate school, more than a decade ago, she's been paying, but she's only been able to afford to pay the interest. So her balance now is actually higher than it was when she took out the loans.
That's amazing. I know. This is a pretty serious problem. We've been talking about student loan debt for a long time, right? Remember when it exceeded, was it credit card debt or consumer? Yeah. I mean, and that was kind of a significant time many years ago. But it's interesting. I was looking, December Bloomberg News Morning Consult poll found 43% of plurality of Gen Z voters, those born in 1997 or later, say Biden is not doing enough to address the burden of loan payments. So, this is something that could certainly come up on the campaign trail.
I wonder just what the future of higher education is at this rate. It's gotten so out of control. I mean, $80,000, close to $90,000 for 1 year at a college.
And, we've talked about inflation, right? We talked about a lot over the last couple of years, but this has definitely outpaced the run-up that we've seen in kind of regular inflation. All right, don't go anywhere. Counting you down to the close. Beyond the Bell starts now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, about 2 minutes away from the end of the trading day, Katie Greifeld and Scarlett Fu counting you down to the closing bell. And here to help take us beyond the bell, we have a global simulcast joined now by Carol Masser and Tim Stenivek, bringing together all of our partnerships here, Carol. And I was just saying to Scarlett, another day, another week without that record closing high.
Yeah, can't get there. Didn't we hit there, though, like on an intraday basis, I think earlier, I think out of the gate? Maybe. That doesn't count, really.
Yeah.
All right. I've been looking at the bank sector, the KBW Bank Index, right? We had a bunch of big banks reporting today. We've all been talking about them. I know you guys have. But that bank index is definitely underperforming as a whole, down about 1% here with just a few minutes left, about a minute and a half here in the trade.
Okay, you've been looking at banks, Carol. I'm looking at the worst performers on a percentage basis in the S&P 500. It's rounded out by airlines. So we see United, Delta, and American, the worst performers there, all because of what Delta said this morning, backing away from its 2024 profit target. The high costs have offset the gains from a rebound in international travel. I'm going to do a little transportation theme in the close today, okay?
Go off.
Yeah, so.
Nice tease.
Oh, you'll have to wait. You'll have to wait.
Oh, that's
But
just a teaser, I see.
Yeah, it's a teaser, okay?
Okay. I'm just looking at the Dow Transportation Average right now, off by 1/3 of 1%. You would think it'd be a little bit bigger, given the steep losses in those airlines, and not to mention Boeing.
Yeah, so maybe us a little bit of resilience there. I don't know if you want to call it that. Of course, it's been a really rough run for Boeing, though, to put it mildly.
Well, and what's interesting, right? We got a softer inflation print today, the PPI number. So continue to look at a 10-year that is staying below 4%, Katie, that 2-year note at 4.15.
All right, we are just seconds away from the closing bell, and you look at how we settled up on the day. Again, a pretty quiet day overall. The S&P 500 barely changed, a touch higher, though. The NASDAQ, again, pretty much unchanged on the day. Not so much if you take a look at the Dow Jones. That is going to end up a little bit heavy there, down by about 0.3%. You take a look at the Russell 2000. Again, same sort of picture. Not too much movement, but heavy trade overall, Carol.
All right, taking a look at the S&P 500, guys, just for a little bit in terms of the big cap average index here. And you've got 259 names, that actually showing some gains on the day, Scarlett. 242 to the downside, 2 unchanged.
It's really hard to get excited about the movement today because there isn't a whole lot. I was just looking yesterday when we were saying that not much had happened. The S&P lost 3.21 points. Today, not much has happened in the aggregate, and it gained 3.6 points. These are the biggest group movers: telecom, energy, and software on the upside. On the downside, autos, banks, and healthcare.
All right, Microsoft overtaking Apple as the world's most valuable company. We talked about it, right, earlier this week.
Yeah.
It's happened before.
Yeah.
Who stays on top, though? That's the question.
Do you wonder, are they, Microsoft saying, yeah? I mean, I wonder how closely they watch this kind of stuff.
And Tim Cook saying, no.
Yeah, exactly. It's a superlative. But we know Apple's been under a lot of pressure, right? A couple of downgrades, some concerns about their China exposure. So you understand, we've seen that stock certainly move down. We've talked about it a lot. I know you guys have as well. And we've seen it certainly among significant decline here in 2024. All right, let's get to the individual gainers on this Friday as we wrap up the trading day. This one, number one in the S&P 500, a top gainer in the NASDAQ 100 as well. Ticker is CTSH, Cognizant Technology Solutions, a gain of about 4% here. This thanks to an upgrade to buy from hold over at Jefferies, which sees improving growth potential for the IT services company. However, continues to have some near-term caution as discretionary spend at clients remains a headwind. Price target up to 85 from 70. Stock closing just below $78 a share today. Stock was up about 32% in 2023. We talked about the banks big time. Overall, the sector under pressure today. But BNY Mellon actually gaining in today's session. We'll bring it up for everybody. And we're seeing it up about 4% here today. It is the nation's oldest bank. It was among the top gainers in the S&P. Just real quickly, reported fourth quarter adjusted earnings per share. That topped expectations. Fourth quarter net interest revenue beat analyst estimates as well. So definitely an outperformer in the bank space today. And then for something different, Potbelly, throwing that in. I thought I'd just throw something.
I like that. I like getting new names in there.
Me too. Up more than 2% today, rallying on heavy volume, hitting, I think, the highest in 5 years during the trade today. Up after Benchmark upgraded the sandwich shop to buy from hold, saying its recent update eased concerns over franchisee-driven unit growth and traffic growth. Price target set at 15, stock closing at 12 and change today. It gained, I had no idea. Tim and I talked about this off air. It gained 90% in 2023. Who knew?
Yeah,
right?
I had no idea until earlier today. People are eating those sandwiches, I guess. Hey, let's get to some of the decliners. Again, a transportation theme that we're going with this afternoon. The worst performer on points basis in the S&P 500 once again goes to Tesla, down 3.7% on the day today. Shares fell after Tesla cut prices again in China, and also said that its only factory in Europe will be disrupted by those attacks in the Red Sea. So in terms of the price cuts for the Model Y and the Model 3, the company reducing the starting price of the Model 3 sedan by about 5.9%, coming out to about $34,300, and then also marked down the Model Y, the SUV, by about 2.8%, so that's down to about $36,400. That's according to Tesla's website. And remember yesterday, this came just hours before the close that Reuters reported that Tesla's going to suspend most production at its Model Y plant near Berlin as a result of those supply chain issues coming from vessels being attacked in the Red Sea. Delta Airlines, I talked about this a little earlier, but we've been talking about it all day, finishing it down by 9% today. It wasn't just Delta, it was United, American Airlines, and Delta as well, at the bottom of the S&P 500 on a percentage basis. All this because Delta backing away from that profit goal for 2024. Adjusted earnings will be $6 to $7 per share. The company has had a long-term profit target for several years of more than $7 a share for 2024, though analysts did expect $6.50 on average. That's according to estimates compiled by Bloomberg. And then Boeing, checking out Boeing, not just for the day, but for the week. The bad news just continues to come, Katie. Boeing finishing it down by more than 2%. The latest in that fallout from last week's mid-air blowout of that door plug. The FAA said that it's conducting an audit of 737 MAX 9 production and its suppliers to evaluate the company's compliance with its approved quality procedures. And then Boeing is also being sued by passengers on that Alaska Airlines flight for unspecified damages. We should note Boeing finishing the week down by more than 12%.
All right, planes, trains, and automobiles
There it
not
is.
having a great week there. Let's talk about the bond market because great week for the bond bulls, especially a great Friday too, especially if you're in the front end of the Treasury curve. 2-year yields falling 9 basis points after that PPI reading. This is interesting because they also fell about 11 basis points yesterday, really rapidly approaching that 4% level. And that's interesting because you take a look at the 2s, 10s yield curve right now. It's inverted by just 20 basis points. Remember when it was below 100? We've really made some big moves there. It's going to be interesting if we get back to positive territory and if we also don't actually get that recession, if the Fed is able to pull off that soft landing, maybe we can declare the yield curve broken.
Maybe we could declare the yield curve broken. I feel like we've been talking about that possibility for a while. When it comes to data next week, all the inflation numbers are out. So we've got retail sales, we've got some trade numbers, and we've got housing as well. But inflation expectations come in at the end of the week too. And it'll be interesting to see if consumers still see prices slowing down.
Yeah, and I do wonder too, we've got a lot of earnings coming next week, a lot more from the financial sector, and we'll be focusing on kind of the CEO commentary. If we can just go back to Microsoft overtaking Apple's market cap, I was looking at the numbers. So it's 2.887 trillion.
Okay.
That's Microsoft. And then Apple's 2.874 trillion. So it's kind of a close
So
horse
can we call
race.
it a tie for now, but not really? Because
You can't really.
Well, Dan Ives of Wedbush says that Apple's going to $4 trillion. So stay tuned.
Yeah, he's extremely bullish. He's extremely bullish. Hey, let's go back to next week and what we have coming up, because we did hear from, of course, many of the big banks. We are going to get Goldman Sachs and Morgan Stanley early next week. A lot of the regional banks, in addition to the regional banks, we'll get Charles Schwab, we'll get State Street. So we still have more, we're just at the beginning of earnings season, so we still have lots more to come. It was interesting to see the sort of, tale of several different banks in the earnings that we got earlier today, and sort of a muted market reaction by the end of the day.
Yeah, not too much movement. You did see the KBW Bank Index have a pretty soggy day, but I think once again, I'm more excited to see the regionals than I am to see the big banks, because the big banks, it's kind of the same story. It feels like, with maybe some asterisks here and there, but the regional banks, we were just talking to Alicia Levine of BNY Mellon. She sees that there could be more consolidation to come when you think about those smaller and mid-sized lenders. And you think about what happened last March, it feels like maybe there's still some parts of that story to play out.
That's a really good point. And their commentary too, right? That gives us some insight to some different regions around the country. All right, guys, that's a wrap. What a week.
Stay warm, everyone. It's going to be cold.
Yeah, if you're going to that Chiefs game,
It's only the 12th.
bundle up.
Tickets are really cheap right now.
37.
All right, guys, stay safe, everybody. Enjoy the long weekend if you are able to, for those that are going to be off. We'll see you again, though, on Tuesday, our cross-platform, on radio, TV, YouTube, and, of course, Bloomberg Originals. We'll see you then. there are a lot of things going on here, and we have talked about the impact of climate change in a big way. You know, the World Economic Forum's annual meeting in Davos gets underway next week. It is that gathering of global leaders, really from all walks of life, and they talk about the major issues that are out there, Tim, and they're looking for solutions. And yesterday we had a conversation about this.
Yeah, we spoke with the CEO of Hackensack Meridian Health, who chairs the forum's health and healthcare governors community. He's headed to Davos to talk about global healthcare concerns. Another topic, though, Carol, that's on the minds of global leaders, climate change. As the world in 2023 witnessed the hottest year on record since at least 1850, and 2024 likely to be even hotter, thanks mainly to human-induced climate change.
And our next guest is headed to Davos, as you said, as well, to talk about solutions to slow or stop climate change. So with us is Ecolab's Chief Sustainability Officer, Emilio Tenuta. The company, by the way, develops and offers water, hygiene, and infection prevention solutions that improve operational efficiencies for customers in the food industry, healthcare, life sciences, hospitality, and industrial markets. So they cover a wide swath of the global economy, U.S. economy. Emilio joining us on Zoom from Minneapolis. Emilio, nice to have you here with us. First up, 40 years, is that correct, at your company? What's that ride been like? What have you seen, watched, got concerned about when it comes to Mother Earth and our global climate?
Oh my goodness. Over those 40 years, I've seen so much in terms of the changes that industry and communities are facing with climate change, being at the forefront of some of the droughts, floods, extreme weather events that we're experiencing, where water has been very much at the heart of the way we experience climate change. Often talked about if climate change were a shark, the water are its teeth, right? And that's how we're feeling it. So that's what we've seen. And obviously Ecolab's been well positioned in terms of helping organizations with their water and climate challenges that they face all over the world.
How has that conversation shifted, though? Because you've been there as Carol mentioned, 4 decades. How has the conversation shifted? There was, I'm guessing, no chief sustainability officer when you started your career at Ecolab.
No. It has evolved, namely in that, I think back, 2008, 2009, when we started to see the rise of sustainability in mainly the consumer packaged good companies. And I started to see this when I was leading businesses within food and beverage and the life sciences business units. And we started to see this emergence of more activism around, the sustainability, if you will, of the feedstock of agricultural commodities that go into a lot of the products that we enjoy, whether it be food and beverage or life sciences. And I started to see that as kind of the beginning stages where water and climate were starting to be associated with businesses, and how, businesses were starting to track water and energy efficiency before even talking about climate goals. And so that's where I've seen this evolution, where now today we see companies setting these bold, ambitious goals. But one of the things that we're still seeing is that water is the forgotten piece of the climate puzzle that organizations don't often think about.
Yeah, listen, there was a headline, I think in the New York Times this week, about the big impact of global citizens who are impacted by not having access to water, really, in this past year. Having said that, I want to go to that, but I want to shift gears a little bit, because it does actually impact water as well. But the microplastics that are found in the U.S.,
everybody's talking about
and
this
water
right now.
Supply, these forever chemicals.
Everyone knows what PFASs are. And
right.
This is a big shift in recent years.
This is a big shift, exactly. I feel like it's just picked up some momentum, but there's a study out that says it's contributing to $250 billion a year health crisis. These microplastics, how are you guys approaching it? How are your clients or, folks that you work with are reaching out to you and say, help us with this? This is terrifying.
Well, that is absolutely a key concern, especially for the municipal markets, where your point about drinking water and other factors that impact people and communities, where Ecolab typically will focus our business efforts is really around the industrial markets. And not to say that PFAS isn't important there as well, because it is, but the focus there is really more on water availability, the water crisis, in terms of the risk they face, in terms of being able to develop and manufacture their products, and at the same time being able to improve the water quality that they discharge with the right technology that they need to really address, the permits that they have when it comes to water quality.
Is there a way for these forever chemicals and for nanoplastics? I mean, we're not just talking about microplastics anymore. We're getting smaller, nanoplastics. Is there a way for these to be removed from the water supply?
There is, and there's technologies that even Ecolab has. We made an acquisition a few years ago by the name of Purelight that uses resin to help. It's part of the process to remove perfluorinated chemicals, which is the PFAS that we were speaking of. And so, yes, there's absolutely technology available to address this. And I think it's twofold. It's not only, one is detection, and then the second is how do you remediate it, right, and get it out of the water system.
Emilio, should we, based on what you know, should we have these types of, not necessarily at the industrial level that Ecolab works on, but in our homes, should we be filtering our tap water? I know that changes depending on where you live, but given what we know about what's in tap water.
Yeah, I mean, many neighborhoods that I'm involved in, that I, with through my family or even my own home, there's more and more we're seeing it prominent that reverse osmosis filters and other type of filters that are used today more than ever. And, it's always encouraged depending on the water quality. And the local municipality does have really typically good record of the type of water quality constituents that are in the water. So I would say that that's continuing to be a trend, and many homes are starting to put those systems into their homes.
Does a reverse osmosis filter remove nanoplastics too?
That I don't know. I'd have to do a little bit more homework on that. But our reverse osmosis is, one of the greatest technologies in the last 30 to 40 years, and it does remove many small particles, but I don't have the details on the microplastics.
Well, and I said it's terrifying, but it's really, if you talk to people who watch the water supplies or watch our environment, they point to a lot of research about nanoplastics or microplastics, which have already been found in people's lungs, their blood, placentas. A 2018 study found an average of 325 pieces of microplastics in a liter of bottled water. Nanoplastics, as we know, could be even more dangerous. So, Emilio, we just have about a minute or so left here, and I do wonder if, as you head over to Davos, is there one thing that you are going to be pushing for in terms of policy or for people to kind of be, have on their radar? What is it? Because when we deal with climate change, most would argue there's a lot of moving pieces to it. But what's front and center here?
Well, I would say that, at the annual meeting at Davos, they're convening under this theme of rebuilding trust. And it's a fitting theme and very relevant to the private sector. And for Ecolab, it's central to what we do every day with our customers when it comes to water and climate solutions, as we talked about, but also to deliver that on a profitable growth along the way to achieving those goals. But I think this point about rebuilding trust is interesting, right? Mm-hmm. Because it starts by reinforcing the importance of the private sector when it comes to disclosure, transparency, and very importantly, the performance of businesses needed to demonstrate that year-over-year achievement, not only of their business goals, but also their bold climate goals. And I think that is one of the things that we're looking forward to. And I would just share with you that Ecolab is very much focused on those type of activities.
Well, good luck and safe travels. Ecolab's Chief Sustainability Officer, Emilio Tenuta, joining us on Zoom from Minneapolis. Carol Masser, Tim Stanovic, live here on Bloomberg Business Week on this Friday. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Microsoft has overtaken Apple to become the world's most valuable publicly traded company for the first time in more than 2 years, as worries over smartphone demand have weighed on the iPhone maker's stock in recent weeks. Today, we had Microsoft up by 1%. Apple shares today, they gained by 0.2%. Among other big tech names, Alphabet, parent of Google, was up by 0.4%. Stocks ended today's session mixed. We had the Dow Jones Industrial Average falling 118 points, a drop there of 0.3%. S&P 500 index advanced 3 points, up by about 0.1%. Nasdaq Composite Index higher, little changed, up by 2 points, up by less than 0.1%. Treasury two-year yields dropped to the lowest since May as a surprise decline in producer prices reinforced bets about Fed rate cuts later this year. 10-year, 3.94%. The two-year, 4.15%. Spot gold up almost $19 the ounce to $2,047. For gold, that was a gain today of 0.9%. Bitcoin down 5.5%. 43,630 for Bitcoin. West Texas Intermediate crude amid Red Sea tensions. Crude up today by 1.1%. WTI 72.81 a barrel. Boeing is being sued by passengers on that Alaska Airlines flight that was forced to make an emergency landing in Portland, Oregon last week after a mid-air blowout of a so-called door plug on the 737 MAX 9 jet. Recapping, stocks finished higher, winning week as well for the S&P today. The S&P was up 3, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, all right, folks, you know, it's early on, yes, in the new year. What is it, January 12th here? And yet I got to say, Tim, it feels like the risks, the concerns, the upsides, the downsides are kind of already falling into place in a big way.
Yeah, we're getting a good idea of at least just some of the risks, the known knowns.
Yeah, the known knowns.
Yeah, it's the known unknowns that you have to be worried about, I guess. On newsstands now, the year ahead issue of Bloomberg Business Week, and in it, what the team has highlighted as the 5 potential trouble spots that could knock the global economy off course. Carol, we're curious, are you?
Yeah, definitely curious. So let's get to it with Bloomberg News global economy reporter Enda Curran on Zoom in Washington, D.C. Enda, thanks so much for being with us. We have been talking a lot about risks here in 2024 with a lot of different parties. So and what's interesting, I feel like, is how much America and like the U.S. versus itself, which the Eurasia Group put as the #1 risk here in 2024, how much of a risk that is when we look at the new year. So come on in on it in terms of how you guys are looking at it.
Yeah, well, thank you. I guess there's two ways. I mean, obviously, this whole conversation around risk has become so normalized in so many ways now. We talk about potential for war in Taiwan, and we talk about all kinds of risk for other events around the world. But there may be two ways of looking at it. There's political and policy risk all around the world. Now, that side of things, that's because it's an unprecedented year for elections in democracies, covering around half the world economy, from emerging economies, important emerging economies like, say, Pakistan, Indonesia, home to key resources and everything else, to some of the more established, bigger ones, obviously like the UK and US. I'll come to the US in a moment. That's the political side, public policy side. And then on the sort of macro side, there's lots of other things up in the air that are still major worry spots, like what's going to happen in China's real estate market. Will the US have a recession? What's going to happen in Germany's industrial base? So there is a lot going on. But to your point, it kind of is hard to look past the US. You know, even with Taiwan this weekend, how the US election goes will be so consequential, both obviously for America itself in terms of America's own public policy and the direction of the country, but globally, because it's so consequential for the global economy and global geopolitics. It's hard to look past what happens in November as well. So like I say, a lot going on two tracks, political and we'll say on the traditional macro front.
What would you say, Enda, is sort of the most important part of the American landscape to watch between now and the end of the year? Is it the election, or is it more basic? Is it the health of the U.S. consumer?
Yeah, so I guess, again, two ways on that. Number one is, how does the economy go this year? Does it eventually trip up into this much vaunted recession that everyone's been talking about for so long? Will it actually happen, or can it pull off a soft landing? That is very important because obviously, A, it's number one important for people's livelihoods, whether they can keep their jobs or not. But obviously, B, that will feed into the political story. You know, if the US pulls off a soft landing, that's obviously good for President Biden, you would, on paper anyway. And if it goes into a recession, that's obviously good for any challenger who can tackle the administration. And then, by extension, how that feeds into election, of course, will feed whatever public policy comes out on the other side of that, which, of course, is both important for the US, but I mean, very consequential for the world, and none more so than the trade channel, which I think will be the key one to watch.
Yeah, really interesting. Also keeping a watch on China. It's interesting. China had a really tough year last year. We all thought it was going to be the comeback year for one of the most important economies, second biggest economy out there, and yet it didn't happen last year. Some are saying maybe it's the underdog and people are so not expecting China to come back this year that maybe it's a good contrarian play. How are you guys sizing it up?
Maybe it's complicated. I think a lot of people are still looking at the real estate sector and wondering why China hasn't taken a kind of a stimulus sledgehammer to fix that problem. The longer that drag on house prices and development goes on, the bigger the drag on China's economy. It makes up maybe around 20% of GDP. Some people say maybe up to 25% of GDP. That's dragging on the whole consumer story there. It's the reason why inflation is so low there. It's the reason why imports into China are so low there. And that's obviously kind of a bit of a dampener on global trade as well. So the key thing I think in China to watch is, do they fix this real estate problem and can they move past that? And then to your point, do the animal spirits come back? Does this famous China consumer story really get motoring? The consumer story hasn't been as bad as popular headlines might suggest, but it certainly hasn't been going at a gangbuster speed it has in previous years. So that will be another key metric to watch, I think, for risk appetite globally.
And concerns over China are certainly what has led to the sell-off that we've seen in Apple stock this year, and why we saw earlier in the day, and Microsoft surpassed Apple once again as the world's most valuable company. Okay, so we talked the U.S., we talked China. Let's get to Europe and talk a little bit about what's going on in Europe and what to watch in Europe, especially in Germany.
Germany's industrial base. It's the engine of the Eurozone. It's in a funk. There's a risk of a recession there. It's on the front line now has obviously been on the front line of the energy crisis because of the Russian invasion of Ukraine. Now you've got the whole supply chain story going on due to the Red Sea disruptions there. So it'll be critical to see how German factories do navigate that storm. And then there are very important elections in Europe this year, especially the European Parliament. Now, the European Parliament isn't, say, that consequential, not like, say, a national level parliament, but it does get to pick who is the head of the European Commission. And there's a feeling that the European Parliament perhaps might veer perhaps to the far right more than it has in previous years. And that will obviously be a very important indicator for sentiment of where things are going as well in Europe. So a lot going on, a lot riding on. Can Germany pull itself out of its bunk and get the rest of the region going, and keep an eye on how the politics go there too.
All right, so we've got American consumer we got to keep a watch on. The Beijing housing crisis, continue to keep a watch on. We talked about Germany over in Europe. Let's get to Japan, because I feel like, again, at the end of the year, we're like, is this going to be the time when Japan is able to exit from negative rates, right? We used to talk about negative rates for so many different parts of the world. Japan, obviously a special situation. Is 2024 it, or maybe not quite yet?
Sounds like it is. Certainly all of our colleagues in Tokyo reckon it will be. As you know, Japan has been such an outlier. When the rest of the advanced economy world were jacking up interest rates over the past few years, Japan was not. It was still going gangbusters with the money printing machine, and it's the only one that has negative interest rate. So the feeling now is they really want to get out of that. Inflation there it doesn't justify having a negative rate, and the thinking is over the coming months they're going to look for a window and maybe just pull that back, get back to zero, by the way. If they do that, that will have a fairly significant ripple effect for global markets. The thinking is a lot of money around the world will look at Japan in a different light and might start going back to Japan, parking there instead of other markets around the world. How much volatility plays out, I think, will ultimately come down to whether the decision is a surprise or not. And I suppose, in truth, probably not much of a surprise now because people are already talking about it. The BOJ seem to be signaling it. I think, most Bank of Japan watchers would say it's a question of when rather than if.
Okay, so we are staying in Asia, and we'll go from Japan to India. Over the past few years, investors have certainly hoped that as growth has slowed in China, that India will be a bright spot when it comes to a growing middle class and a place where global companies can sell to the Indian consumer. What's the outlook for India?
So India has been trying to pitch itself as this alternative to China, especially over the past few years, with all of the political tensions around China, with the COVID zero drama. Investor sentiment is so negative towards China. There was the thinking of, well, where can we go? And India was putting up its hand, hey, look at us, we're over here. And FDI has been increasing. It has been having success in some areas. But I think, again, a lot of people would say to you, there's a lot of work to do there before it really presents itself as a real rival to China in terms of offering the kind of infrastructure you need and the scale that China offers to attract global manufacturing. And then domestically, of course, there are complaints of a lot of political repression in India. We've got an election this year, unlikely to change the government. Prime Minister Modi due to get re-elected there as well. So it's kind of on the surface presenting itself as an alternative, but I think a lot of analysts would say it's not quite there yet.
Feels like a full plate, to say the least. Enda, thank you so much. Really appreciate it. Enda Curran, Bloomberg News Global Economy Reporter, joining us on Zoom in Washington, D.C. By the way, this featured in the new issue of Bloomberg Business Week, which is on newsstands, on the Bloomberg, and of course at Bloomberg.com/businessweek.
Hey, let's get a check on the latest world and national news. For that, we stay in Washington, D.C. and go to Nancy Lyons in the Bloomberg 99.1 newsroom. Hey, Nance.
Thanks, Tim. Yemen's Houthi rebels are vowing to retaliate for American and British airstrikes. The U.S. and the U.K. took aim at more than 60 Houthi targets in 16 locations across Yemen overnight. The bombing was in response to the Houthis' campaign of drone and missile attacks on commercial ships in the Red Sea. Norman Rule, a former intelligence officer now with the Center for Strategic and International Studies, says it's unclear if the situation will now escalate.
We hope it's a one-off, but that's really up to the Houthis. I think what we have to look at is whether a Houthi counter strike will be symbolic, meant to show defiance, or really something that indicates that they haven't got the message. If the latter is the case, there will certainly be a broader strike by the United States, probably the United Kingdom. But again, it'll be carefully calibrated to move up the escalatory ladder.
That's Norman Rule, who spoke with Bloomberg Surveillance. President Biden says he still has confidence in Defense Secretary Lloyd Austin after he failed for days to inform the White House that he'd been hospitalized. Biden today did say it was a lapse in judgment, though, for Austin to not inform him sooner of his condition. The Biden administration is rolling out another pathway to debt relief for certain student loan borrowers. The program targets people who took out less than $12,000 as their initial student loan balance and have been paying it down for 10 years. Education Secretary Miguel Cardona outlined the details on ABC's Start Here podcast.
For those who have borrowed either $12,000 or less, after 10 years, they would be receiving loan forgiveness. But we were going to roll that out in July of this year, and eager to do that. But instead, we're going to be rolling it out today.
Again, Education Secretary Miguel Cardona. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. First full week of trading for 2024 is behind us. For the week, S&P 500 index up by 1.8%. Mixed Friday today, though. We had the Dow declining. The S&P and NASDAQ, they both advanced. 3-point gain today for the S&P, now standing at 4783, up by about 0.1%. NASDAQ up 2 points, little changed, up less than 0.1%. The Dow lower by 118 today, down by 0.3%. 10-year yield 3.94%, with a 2-year 4.14%. Treasury 2-year yields dropped to the lowest level since May as a surprise decline in producer prices reinforced bets on Fed rate cuts this year. Now, what about the timing of those rate cuts? Kathy Jones is chief fixed income strategist at the Schwab Center for Financial Research, and she was a guest right here on Bloomberg Business Week.
One reason we think May is a better estimate of the starting point than March is that the Fed still has to deal with quantitative tightening and tapering down that program.
Right.
Expecting that to happen in March, or some indication of that in March, and then the rate cut would start in May.
And again, we've got the 10-year right now, 3.94%. By the way, you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Gold up $19 the ounce today to $2,048, up by 1%. West Texas Intermediate crude up 1%, $72.73 a barrel. Bitcoin could not ignore the move there. Bitcoin down today by 6% at 43,369. Friday, bank earnings. J.P. Morgan Chase down 0.7%. Citigroup announcing job cuts, 20,000 roles being cut, up today by 1%. Wells Fargo down 3.3%. Bank of America down 1.1%. Recapping, turned out to be a mixed Friday. The Dow lower, S&P up 3, a gain of 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time for our weekly look at crypto, although, Tim, it's safe to say this week has been all about crypto.
Yeah, Bitcoin specifically, as the SEC approved a spot Bitcoin ETF on Wednesday, and they all began trading yesterday. We just heard the daily move on Bitcoin from Charlie just now, but how about for the week, Carol? Venture to guess what Bitcoin did this week?
Down?
Yeah, down 2%.
Yeah, it was kind of interesting to watch the trade, right? A little bit of a pop, I think, initially.
Oh, a big pop. I mean, up to 49,000.
Oh, that's right, to go above.
Yeah, now we're at 43,
All right,
358.
well, we want to talk about a different type of coin, and we've got a good guest to do it with. We've got the founder, president, and chairwoman of Unicoin.
Yeah, Silvina Moschini. Unicoin is a cryptocurrency backed by equity stakes in companies, equities, real estate, and more. Silvina, good to have you with us, joining us from Miami, a place that's quite a bit warmer than where we are here in New York City. Explain Unicoin.
Warming, very, very nice to be here. Thank you so much for the invitation.
Explain what Unicoin is, because it's not a traditional, if there is such a thing, cryptocurrency.
Well, Unicoin is an asset-backed public reporting, a cryptocurrency. We like to call it the next generation cryptocurrency because we build it to address many of the issues related to traditional crypto, including the volatility, but also, of course, including the lack of transparency. So we build this company investing in assets, including high-growth company potentials, like the companies that have the potential to become unicorns, also real estate, and we are also venturing into art as an asset class to back this coin and be able to democratize the access to investment opportunity for many people that perhaps before never invested either in crypto nor in the pre-IPO market.
Why do you think cryptocurrency needs to be backed by real assets? So you're backing this with real estate, you mentioned art, equities, equity stakes in companies. Why do you think this product needs to exist?
Well, for many reasons, Tim. As you know, the natural evolution of money started from the trading of assets, the barter into shells, into gold standard, into the Federal Reserve backing the money. And today we believe that if currencies such as Dogecoin, including Bitcoin, reached the valuation just based on the perception. It also carry away a lot of volatility. So the fact that we have assets, it gives us the opportunity to access these assets and have the capital that we need to be able to bring more control and more visibility into the market. And it creates a better business models that enable more people to invest, because for many people, crypto as a very positive thing that it brings into the market is that it's the first investment opportunity because it's simple, but it's highly volatile. So it addresses the volatility, the fact that we have assets backing the coin.
Is Unicoin out there right now? Like, can people buy and sell it right now? Because I don't see it on CoinMarketCap.
No, you are not going to see it yet. It's going to be listed very soon. Our strategy was completely different. We are financial experts and technology experts, but we think of the financial model first. So we first focus on creating a world-renowned brand through our partnership with our sister company, Unicorn Hunters. We scout for companies all around the world to take equity stakes on these companies and also invest on different type of assets, including real estate. So we did a pre-sale. We sold over 500 million in the pre-sale, in pre-ICO. So people can buy only for now in unicoin.com. And once we tokenize and to list, we announce a partnership listing agreement with INX. They will be able to sell it and to buy it.
It's kind of an eclectic mix of investment. So there's a Thailand luxury resort. There's an Argentine copper mine. There's a ton of companies, as you said. It sounds like the idea is you hope they become unicorns. It sounds like angel investing or very early seed investing in terms of the companies. They're private. So for an investor, it sounds like there's a lot of risk. And so help me out here and understand, because it sounds like there's a fair amount of risk and unknowns because it's a mixture of a lot of different things.
Well, Carol, risk is embedded in our daily life. Like a lot of people go to Las Vegas and gamble knowing that the house always wins. Anyone that invests knows that there is...
Yeah, but are you saying, no, but if I'm going to buy an index, there's a certain amount of, I know the companies and they're large cap, well-known liquid companies that I'm investing in. If I go to Vegas, there's a reason why there's casino companies out there. They make money because most of the time the house wins. So are you saying investing in Unicoin is similar to going to a casino company?
No, I was just trying to make a joke to take it to the other extreme. The companies that we have in the show, 2 of them out of 18 companies have an exit this year, and it was in the worst possible moment of the tech market. So they are not super early stage, they are not late stage, but this is a tiny portion of the assets that we have back in Unicoin. We have over 1.3.
What's the biggest amount in terms of assets that are in your portfolio? What's the biggest exposure?
For the companies that we have on the technology, or
no, it's a mixed bag of investments that are in Unicoin. What's the biggest exposure? Yeah,
we have high growth company potential at different stages. We started with the first season of Unicorn Hunters with earlier stages, but even though 2 of the companies that we have an exit, but then we venture into real estate, and we have in real estate from commercial to lands, to hotels, revenue-generating properties, and we are now expanding into different asset class, including art. So what we believe, and our thesis, Carol, is that we are diversifying the assets that are back in the portfolio, looking for either liquidity in case we need to have money to repurchase the coins, but also appreciation over time. And the diversification is not anchored only in the type of assets that are backing the coin, but also on the geographically distribution. That's why you will see a copper mine, not probably the most liquid asset, but something that it's appreciating, because copper is one of the essential minerals in the list of top essential minerals in the US, for example.
Right.
But then we have hotels that are generating revenue. So it's a mix. And we also took a different approach in the way that we sell the coin. We did pre-sale, but we created advanced financial instruments. Buy now, pay later.
Okay.
So we sold over $500 million. In a big chunk of that, using collateralized asset collateralized in the sale of
Okay,
the coin.
we've got to run. Silvina, thank you so much. She is founder, president, and chairwoman of Unicoin, a cryptocurrency backed by equity stakes in companies, equities, real estate, and more, but not yet out of the gate.
Not yet out of the gate. Soon.
Soon. So we'll be tracking it. This is Bloomberg.
BlackRock is buying Adebayo Ogunlesi's Global Infrastructure Partners for about $12.5 billion, vaulting the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, and digital infrastructure. BlackRock CEO spoke about the deal this morning with Bloomberg Radio.
I think we have the business strategy down. I am confident we are in the early part of this infrastructure revolution, and we wanted to have the scale We wanted to have the expertise, the operational expertise of GIP, marrying that expertise with BlackRock's global relationships with companies and governments, marrying our existing expertise in decarbonization and infrastructure. It's a perfect partnership.
And today we did see BlackRock shares up by about 0.9%. And those are our top company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenivek and Carol Masser live in the Bloomberg Interactive Brokers studio.
We talk a lot off air.
New York. We do, and now they moved us. We're closer together. It's like,
it's
you know what?
It's going to be dangerous.
They're going to have to pull this car over and separate us.
They are.
That's what they're going to have to do.
That's exactly.
Hey, let's get a check on the latest world and national news. We got Nancy Lyons down in the Bloomberg 991 newsroom in Washington, D.C. Hey, Nance.
Hey, Tim. The U.S. is still working to assess damage from overnight missile strikes carried out by the U.S. and the U.K. on Houthi targets in Yemen. National Security Council spokesman John Kirby briefed reporters this afternoon.
It could take some hours before we can have a better sense, a clearer sense of what the actual damage done. I would just remind that these were all valid, legitimate military targets, all really aimed at going after the Houthis' ability to store, launch, and guide drones and missiles.
Kirby says the U.S. is not interested in a war with Yemen. Israel defended itself today at the UN's top court after South Africa presented its case yesterday that Israel's war with Hamas in Gaza amounts to genocide against Palestinians. Legal advisor to Israel's foreign ministry, Tal Becker, defended the Gaza attacks before the International Court of Justice at The Hague.
Israel is fighting Hamas terrorists, not the civilian population. Israel aims to ensure that Gaza can never again be used as a launch pad for terrorism.
Becker says South Africa's complaint presents a distorted factual and legal picture of what's happening in the war. House Speaker Mike Johnson is holding firm and says he will stick with the spending deal he made with Senate Majority Leader Chuck Schumer. That eases the threat of a government shutdown, but it could jeopardize his position as Speaker, with at least two far-right colleagues saying they will consider ousting him. Hunter Biden is reversing his defiance of House Republican impeachment investigators and is offering to testify before them privately after insisting he would only answer their questions in public. His attorney made the offer in a letter today, just 2 days after Hunter Biden showed up at a meeting of a House committee that was voting on a contempt recommendation against him. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg. Now back to you, Carol and Tim.
All right, Nancy, thank you so much. Nancy Lyons in D.C. Hey, folks, if you're in Chicago, if you're in New York, get ready for a powerful storm that's going to come across, it seems.
It's everywhere.
Yeah, the weather is... So there is a powerful storm moving across central and eastern U.S., threatening to unleash flash flooding in New York City, which is a bummer. Tim and I both live in and around New York City. He's in the city. I'm just right outside. Dumping also heavy snow on the greater Chicago area and snarling travel. So get ready, everybody.
Okay, so up to 2.5 inches of rain could fall between tonight and Saturday morning.
That's a lot.
From northern New Jersey to southern New England. That's according to the National Weather Service. Then we zoom out. Let's go to Chicago. The Chicago suburbs may get as much as 12 inches of snow. God. Well, the city itself is expecting to get 3 to 6 inches. That's according to Mark Chenard, a senior branch forecaster at the U.S. Weather Prediction Center. It's not just...
Can I say one thing?
Yeah.
There were almost 2,500 flight cancellations in and out of the U.S. as of 10:58 a.m. New York time, according to FlightAware, while more than 1,000 scrapped to and from Chicago's O'Hare and Midway Airport. So sorry if you're trying to travel in and around.
Chicago, tough place to fly through in the winter. I'm just gonna throw that out there. You know, I know United has a big hub there, but let's just say
not great. So should we go to Iowa?
I would pack very warm clothes if I were being sent to Iowa, like many of our colleagues for Monday's caucuses.